Okay, now if you look at the income statement, we are going to look at the trade part only first now. Okay, you understood what is the difference between these two accounts, why we are preparing the trade account, why we don't need to prepare the trade account, we know, right? But now we are going to prepare the trade account under the income statement. Okay, when I prepare this one, I just make it sure myself. I just made it two column, but don't write it here debit credit. Just for your information only, keep in mind the first one is debit side, second one is credit side. Okay, keep in mind only. Now I am going to prepare the income statement vertical wise. Okay, for that information just keep in mind, but don't write it here debit and credit. Clear? When you make it this one, you can write it details, amount. Okay, keep it like that, but you have to keep in your mind this is debit, this is credit, then easy to understand how to apply it. Okay, basically when you prepare the income statement, the first part trade account, when you prepare the trade account, you have to know always we should start with the credit. We should start with the credit balance. Now which is credit here? Sales or purchase? Sales is credit. Now we have to start with the sales. Sales is credit. I just put the under the credit side, let's say 15,000 amount. Okay, basically how we are bringing here, that we should understand the concept, how we are bringing to here credit side. From the trial balance, if we take the trial balance itself as debit credit, you can see here sales is 15,000, always is credit side. If it is credit that balance, when you transfer to here, it comes credit side. From there, just we are copying here. Okay. Or you have to think like this also. If we take the sales account already the balance is now from the trial balance. When you prepare the sales account, we'll write the balance here 15,000. Okay. Now we are transferred this sales account to income statement. How will transfer it? Debit here, credit here. Then what we are going to write here, from where we took it, this one from the sales account, but here what we'll write, income statement. Why? It comes from the income statement. See, now what happened, basically sales account is closed. That means permanently we are closing the sales account. Clear, right? Now when you close the sales account, from the ledger account, sales is gone out now. It is not anymore, it is not there. That's why we have two options. One, we are taking from the trial balance, because already the sales account is transferred to trial balance, we are taking from here. Or what we'll do, from the sales account we are moving. Actually what we are doing here, we are moving from here. But then if we have the trial balance, you don't need to go and look at here all the account. From here you can create it. Clear? Now the sales account is credit. Now the main important point, if you have the sales, you have the sales return too. Sales return. That sales return is debit balance. You know that is debit balance. But if we have any debit balance, that sales return, that debit balance, we should keep it debit side, right? If any debit balance, if we are keeping other side, if you move into other side, let's say $2,000, it should be debit side. Then credit side 15,000, debit side 2,000, mean how much different? 13,000. What you did? Because different side, we minus it. But accounting policy says you cannot write down under the debit side, because even though it is debit, it should go under the sales, you have to minus. Clear? Now actually how much sales we have now? 13,000. Understood? This is a format that we have to follow. We cannot change the format. Now sales part finish. This part finish. Okay. Now we have purchase. When you come to the purchase, there's a big things you have to know. Purchase means we are purchasing the goods to resale, right? But if you purchase already last year, that goods is still remaining in your organization, it is called opening inventory. Opening inventory. That opening inventory already purchased. Already purchased means debit balance. Now we come to that. Opening inventory, let's say 2,500. Now this year you are purchasing goods, let's say $3,000. Purchasing goods how much? Debit balance. Now purchases, let's say 3,000. Okay, now when you purchase goods from foreign country or some other country, you have to bring that goods from there to here, to our organization. For that we have some direct expenses, we have some expenses. That expenses we have to add it. We call purchase expenses. Okay. Now, example for purchase expenses, we can say import tax. Import tax. Import tax, let's say $200. Okay, basically this import tax you can find out from the trial balance. It will be here. Where? Import tax, it will be debit side. If it is debit, it goes to debit side. If it is credit, it goes to credit side. Now see the sales return. Sales return here is debit side. 2,000. But what we did, when you are putting to the credit side, we just minus it. If any credit balance, if you are keeping debit side, what we will do? We have to minus it. Understood? That is the concept. Now import tax, then they will charge the custom tax, let's say $100. Then after that, bring from the harbor to our organization, then transport, or you can say carriage inwards. This all our expenses, right? Okay. This all comes from where? From the trial balance. This all which side in the trial balance? Debit side. Clear? Or you can see this all under the particular account. I'll take one example, custom tax. If we take the custom tax account, custom tax, it will be debit side, let's say $200, $100, right? This is balance. Balance from where? We are taking from the trial balance, okay? Now this one we have 100. This custom tax we have to move into income statement. How you can move it? Close this account, credit, and debit to this account. See what happened now? Automatically custom tax, here income statement, here we write the custom tax, this account is closed, right? Now what we'll do, if we have more, that we can take it now. We can total now 5,500, 6,000 total. Now out of this, sometime purchase goods, sometime we might return it. Purchase return. Purchase return always which balance? Is credit side. It is credit balance. Now purchase return is credit balance. That credit balance, when you bring it here, purchase return, let's say $1,500, it should be credit side, but purchase return related to purchase. Then you have to write down here only. When you keep it debit side, you have to minus. Why? Because it is always credit balance. You are keeping here. Then when you minus here, 4,500. The next point is, after that, end of the year. When you come to the end of the year, that means you have some stocks still remaining without selling. This is called ending inventory. That ending inventory you have to minus to find out how much we sold the cost. That's why ending inventory, we have to minus, let's say $1,000 example. Then how much you have now? 4,500 minus 1,000, that will be 3,500. We are writing here. When you are writing 3,500, this should be debit side. When you keeping here, you have to put the bracket because we are changing the side. That is called cost of sales. Cost of sales. Now cost of sales is 3,500. We sold the goods for 13,000. How much difference between these two? Because this one basically is credit balance. This is credit side. This one is bracket mean, it should be here. No, that is debit balance. This is debit balance, this is credit balance. The difference between these two, how much now? 13,000 minus 3,500. How much that one? 9,500. What is this 9,500? This is called gross profit. Gross profit. After selling the goods, we are getting the profit 9,500. Basically, this 3,500 cost of goods we are selling in the market for how much? 13,000. Therefore, we are getting 9,500 profit. It is called gross profit. If it is come minus, we call gross loss. Gross loss. Basically, we have discussed here all together what we discussed, not all the income statement, the part of the income statement, what we discuss now, the trade account, only the portion that we discuss now. Clear? The next we have to discuss the profit and loss account, along with this. From here, we have to continue the profit and loss account.